Well, it's time now for a look at some of the day's top business stories. And we're starting with some higher than expected inflation figures in the US. France 24's Cole Stangler is here to tell us more.
Yeah, that's right, Haxie. Government data finding prices rising at their fastest pace in just over 3 decades. Last month's consumer price index was up some 6.2% when compared to last October. It marks the 5th straight month of inflation at over 5%, increasingly worrying policymakers and consumers. While the U.S. leads the pack, other countries are also seeing some steady hikes in prices. Eurozone prices have grown about 4% over the last year. The U.K. has seen a 3% raise, expected to hit 4% by the end of the year. While the jump is smaller in China here, you can see these numbers here of inflation in other countries, and finally getting China here up on the board. Well, that's the smaller than what we're seeing elsewhere. Inflation is also still growing there. Number of factors driving these increases. Above all, global supply chain problems, pent-up demand, and tighter labor markets also might be having an impact, especially in the U.S., while rising energy costs are another factor as well. Now, there's debate over just how temporary or not the trend is. While top officials at the Fed have suggested it'll fade soon, Wednesday's data does provide some new ammunition to their critics. Well, turning now to the European markets, which are posting some slight losses at the open as investors are taking in those U.S. inflation figures. As you can see right here, the FTSE showing some losses. Also, investors reacting to new data showing British GDP grew just 1% in the third quarter. Over on the major Asian indexes, we are seeing some pretty solid gains across the board, with the exception of the Seoul over the Kospi, over in Seoul. In Hong Kong, meanwhile, shares for Evergrande are up around 6%. It's after bondholders reportedly received overdue payments from the deeply indebted developer. Well, next up, the annual summit of APEC is rolling on. That's the Asia-Pacific Economic Cooperation Forum. This year's version is hosted online by New Zealand, and the country's prime minister took to the floor earlier. She touted the benefits of free trade while encouraging states to draw back support for the fossil fuel sector.
And governments have a responsibility to send the right signals to businesses and consumers, for example, by discouraging inefficient use of fossil fuels. Why on earth are governments subsidising fossil fuel use to the tune of some $500 billion every year? I'm pleased that APEC is turning the tide on these subsidies by taking concrete steps to tackle them.
Meanwhile, workers in the United States are taking advantage of a tighter labor market to press for better pay and conditions. Now, the coffee chain Starbucks is in their crosshairs, with employees in Buffalo, New York, fighting to form the first ever unions at the firm's U.S. branches. If they succeed, it could be a watershed movement for the labor movement. Catherine Viette has the details.
Starbucks is facing a union drive in Buffalo, New York. The employees working at 3 stores in the city will vote next month on whether to join Workers United Upstate New York, an affiliate of the Service Employees International Union. It's shaping up to be a bitter battle after some workers filed a complaint with the National Labor Relations Board, accusing the coffee chain of intimidation and attempting to interfere with the union vote. Pro-union employees say chronic understaffing, insufficient training, and lagging pay increases are all issues that need to be addressed. Starbucks, though, has been pushing back hard, saying a union would make it more difficult for Starbucks to meet staff demands. The company says it offers benefits that are rare among other food chains, including health care coverage for part-time employees. And it's been actively encouraging staff to vote against the union, sending senior managers to Buffalo to make their case, including former CEO Howard Schultz. In a letter published on Starbucks' website, Schultz said no partner has ever needed to have a representative seek to obtain things we all have as partners at Starbucks, adding he was saddened and concerned to hear anyone thinks that this is needed now. None of Starbucks' nearly 9,000 U.S. cafes are unionized. However, the current tight labor market has emboldened many workers to press for better pay and conditions. Should the Starbucks employees win, it would send a strong signal to other big corporations that the labor movement is making a comeback.
And finally, Elon Musk turned heads over the weekend when he conducted a poll on Twitter asking whether or not he should sell his stock in Tesla. According to filings made public, that's precisely what's happened this week. the world's richest man, has sold about $5 billion worth of company shares, part of it following a prearranged plan set up in September, well before that Twitter poll. Musk isn't paid in cash by Tesla and says the only way for him to pay taxes is to sell stock. But Haxie, I suppose the mystery still remains here. What was the point of this Twitter poll? Was it to help him lower his tax bill, as some have suggested, or just to get people to talk about him? Two things that he does like quite a bit, Elon Musk.
That is pretty on brand, it has to be said. Cole Stangler with a look through the day's top business stories. Thank you very much.